But this is what I was talking about with Cove. Oh, shit. So Cove, let me open it up real quick and then I'll show you guys a little bit more of what it is. It's pretty much the simplest dumb version of me explaining it is the phase one is not only the having a our own crypto wallet, but it's Cove AI that's really, really interesting right now, where we're building pretty much a ChatGPT specifically designed for crypto, blockchain, etc. And that doesn't mean like just coins. I'm talking about like blockchain as a whole. Um, and I'm really like what I'm using the alpha as, because we're at alpha phase, then we're gonna get into beta phase and we're gonna get into the full launch release, which is like early next year. I really want to use it to help me just fully grasp the idea of Web3, because I think it's a bit of a complex kind of concept. I don't know if you guys know if you guys know what Web3 is. Like if you guys see here, oh, this is something I did for my friend yesterday. How can we capitalize tokenization of real estate? Uh, and then this is kind of what we had asked it earlier, but it's pretty neat. This is like just phase one of what we want to create. This is just kind of not. This is only the AI side of Cove. But what we want to do is create an entire Web3 ecospace where we pretty much give um, anyone with any type of ambition in any kind of way with Web3, whether it's tokenization of real estate, whether it's creating any type of crypto project, whether it's creating any type of blockchain solution for like a real world problem. It's kind of just giving the platform the capabilities and the access to create something like that, and then create pretty much an entire ecosystem around it, because the whole deal, like, I don't know if you guys deal with crypto wallets, but a lot of the times, like, they're fucking annoying to use. I'm always like having to be very, 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 very like attentive with like making sure that I have the right address, making sure I have the right amount, and just making sure that doesn't mess up. Like my biggest nightmare is like if one day I have to send like a lot of money through crypto and I send it to like the wrong network or like send it to the wrong address, like that would be so stupid because it's 100% my control. So we want to make everything very convenient, very easy to use and stuff like that. And the cool thing about Cove is it could even help with like um with developing an idea in real time. Like let me say like I can ask it stuff in real time. Like it's not just like a theory thing. It can also be stuff that I can use to um stuff that I can apply like today right now to get more involved, blah blah blah. You see what I'm saying? And then obviously like we're still working on it, like the whole um all the layouts and stuff like that is all the layouts and stuff like that are still gonna be, yeah, you see like it's still working on stuff like that. Like you see what I mean? But yeah, what do you guys think about this? Pretty cool, right? Pretty neat, right? And what's cool is this is there's going to be like a free option, you know, just like how ChatGPT has like its own free option. Uh, any way to invest in the platform as an IPO. If you have a lot of money, we can talk. Yeah, we're going through our first round of funding right now. If yeah, like for anything, you can just DM me on Instagram or Discord or something like that, um, and we can talk for sure. But yeah, this isn't a pitch, by the way. It's not a pitch, guys. Like I'm just showing you guys like kind of what it is and how I'm going to be using it. And obviously, like I'm an investor in the platform, so like you know, hope that this is a pretty good bet over the next 5, 10 years. But yeah, if you guys want, we can ask it a quick question before we get started on the reviews and stuff. You guys want to know anything in terms of Web3? Like, let me actually ask it this. Explain to me as a trader what Web3 is. After this, we can get started. So yeah, pretty cool, right? Pretty neat. So if you guys want this, you know what I'm gonna do? And put this in the chat because this is the gist. Oh shit, I can't put it all in one place. Okay, well anyways, you guys can just go back to the recording and look at this. Wait, not there. Page 1, 2, 3, 4. Yeah, so if you guys want to go back to the recording, we can go ahead and you can go ahead and read into that. But super neat. But yeah, anyway, that's what this is. And I specifically posted this video because this is like free game. This is all free game. If you like once you understand what Web3 is and you start delving into what tokenization is, then we start figuring out how we as individuals can make money, kind of how banks do in an actual legit way. Like, not trading like the banks, like all that bullshit you hear on social media with trading, but this is legitimately how like an opportunity to make money how banks do because we're giving ownership to the people. That's what Web3 is. Um, which can have pros and cons, but that's why I'm still trying to learn more about it too. But anyways, hope everybody's doing well. I want to go over a couple of trades today, and a couple of just losses that I went through this week. I guess we can get started through here. So I've actually been starting to look into gold. I didn't take this gold trade, uh, but I have been looking into it and seeing if I can maybe capitalize on a couple of plays, um, just to see if the sweet bottle is as effective as it is everywhere. But obviously it is. But here, right, just the simple explanation of the sweep model for anybody who is still curious. It's I use a range that's within previous direction, right? Because I need that range to be swept because the whole general theme of the sweep model is to have a CBOS continuation, right? And the there's different ways to go about profit taking. It's like you could take 50% at the 50%, or you could take full TP here, or you could take a partial here. But for the most part, I'm aiming for the low of the range because I don't know. Sometimes like I can be selling a bit low. I could be selling in like in like a major intraday discount, and maybe this is now the sweep, and then we now have a transition, and then it goes to break even. So I know that I know that just based on how sweep models work, if this is to continue lower, then I will for sure hit this target. And if I can for sure hit that target, then after that, I don't care what happens. So it's a pretty much a CBOS continuation model, and I have my range that's in alignment with the external direction. And then I'm just looking for either the transition up here or with the implied sweep, some type of engulfing or a type of engulfing, excuse me. Right. And this was pretty much very well played out. Like there's even re-entries as well, which is something that I've been working on is trying to add on re-entries. The reason for that is because sometimes I feel like I'm kind of like selling myself short with seeing my trades go really, really just high compared to where I'm taking my profits. So I do want to start leaving runners. I do want to start aiming for more because like I think the natural progression of a trader is like step one, you got to learn how to read direction. Two, you got to learn how to take a trade based on direction with appropriate invalidations and all that, etc. And then step three is how can you maximize on your biggest winners or on all of your winners for the most part. Like if you can go through that's three-step process. Number one, figuring out how to get direction right. Number two, how to execute on that direction that's correct. And then three, how to maximize the winners or how to maximize the total return based on those winners. That's pretty much the three of the biggest, I guess, problems that you can solve to I guess progress per se. But anyways, similar model here with AUDUSD. We are externally bearish. We do have external bullish bearish structure. There is weak order flow here, but the reason why I took this scenario here is because we had the news release here, right? So we had the news release and we left equal lows. So I knew that if we had some type of transition, then I can justify this going lower. And there is like a very nice set of a previous low here externally. And so although I didn't take my position here with during my kill zone, um, which I'm glad I didn't because I guess I would have broken even. And but really the general theme here, this is going to be one of the models with the implied sweep. I like the 3-pin pattern. Take a 3-pin pattern sweep where I have like this like a 3-pin pattern and but for this execution I did have an engulfing as soon as after that the 3-pin pattern. So mitigation there, engulfing here, and um I'm taking my position based on internal structure, right? As you can see here, I took it based on this hit here. The reason why I've been taking it for the immediate hit and not waiting for it to come back is because sometimes it won't, and that's one of the biggest things I've been noticing with sweep models, especially with the implied sweeps. That's why I created the implied sweep because I'm taking it based on a closure, not based on a return to POI, if that makes sense. So, this one it did kind of tap the POI kind of immediately, and then gave me the reaction, and then I had a second reentry here, right? And if you guys are curious how I'm going about the risk management of the reentries is I'm usually doing half the dollar sign risk of the original entry. So like let's say I'm betting like $100 on this trade, then I want to do like $50 for this entire scenario here, right? Unless I am to like take this execution and then have the same invalidation as my original entry, because obviously the invalidation is still up here. So if then I am to take that, then I'll take like the full risk again, or I'll take the half risk at that type of perimeter. It's just something I'm trying to figure out, because I just don't want to take a stupid loss because obviously we could have an M1 failure and to create an LGC and then continue lower, right? So I'd rather avoid that silly loss rather than try to be greedy and catch every single move to the downside, because not every trade is going to give me the order flow to be clean like this. You know, it's not always going to give me that. So if I can then have maybe another failure, or if I could just maybe start staying away from M1, because that's kind of what I've been doing this week is trying not to stay glued to M1, because M1 technically isn't even a scalp time frame, it's a micro time frame. Scalp time frames are usually like M3, M5. But it's something I'm still working on, which from here, unfortunately, this kind of just melted from there, luckily. Um, but yeah, any questions, concerns? Any questions with the two sweet models here? Oh, no questions? Oh, so the candlestick pattern, yeah, bro, I, I love engulfings, bro. Like I've been saying this for what it's been probably like this entire year, no? That I've been really just liking engulfings. I do value engulfings. Like this is like the one of the biggest like beliefs that I've been trying to break over the past like year or two is that methods work. Almost any method will work. It just depends on where and how you apply it. Like if you apply manipulation liquidity to almost any kind of model, it will more than likely work out because manipulation is a market law. Like you need manipulation, you need you need liquidity in one direction to go the opposite way. So if I can apply manipulation and then apply other patterns below that or other sequences below that, then I'm now building an arsenal that's based on a model of where moves are created because moves are created based on manipulation. That's why the CBOS concept was created because this break is not a reversal, it's a grab of liquidity to continue lower. Yeah, the three pin. Yeah, actually, I'm gonna have that on my I'm gonna have that on my what's it called on my cheat sheet. But the cool thing about the three pin is like, look at what this implies. Like, if we have this pattern here, let me see if I can zoom in. I can't zoom in. That's gay. Anyways, um, a three pin pattern internally is a shift in structure because if we have right the first candle range that obviously is being swept. And then obviously you need the low to go to the high. And then as soon as the third candle is occurring, it's breaking through the second candle, which means there's an internal structure break. That's why I like the three pin pattern. But I like it to look perfect like this. Like we have a bullish candle and then a inverted hammer or pretty much like a candle like this. And then have the bearish candle like that. Because this is what's implying that there's right here, like I said, the internal bullish range. Then that bullish range is being manipulated based on the low to the high, and then it's coming back down. And then the third candle is implying the structure break to the downside. Classic, 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 timeless pattern. Timeless pattern. It's like the engulfing. Timeless, timeless, timeless. Um, but that's it's kind of like an implied internal structure break. But not to mention there's a built-in engulfing to it too, you know? So that's something that's going to be on my cheat sheet as well. And these are patterns that if you guys go through like the old zooms, like old zooms, I used to always talk about like bullish and bearish dojis just because they used to be very effective and now I just figured out how to reapply them again. Because this is pretty much what a three pin pattern is here, right? You have a bullish range, you have the manipulation closure down, and then you have the bearish engulfing. So like obviously it's not a three pin pattern, but this is kind of like what it's representing internally. But yeah, want to get into two losses from this week? I don't like how these are not, I don't like how these are blurry. Yeah, you know what? Maybe I can just I'll just show you guys. But the one was AU, one was UCAD. Let me go ahead and show you guys on the actual chart. It was here. Um, so I want to show you guys these losses just because a lot of the time you will see scenarios that just will not fit rules, that will not give the possibility of giving a move that you would have wanted. Um, and really it doesn't have to make sense. And I need everybody to be okay with that because I have to come to peace with the fact that I'm not perfect and that the market is not perfect and that I don't necessarily know how the market operates. I just kind of operate off hunches because a manipulation is a hunch at the end of the day, right? And it's all probabilities, it's all possibilities. You know what I'm saying? So I want to show you guys this because I was actually aiming for this. I'll tell you guys my bias with AU, why I've been bearish like all week is if we go to the weekly, this has just been on my mind the entire week, right? Like this potential three pin pattern, but I said before it was a three pin pattern. Internally, the internal range here, we did bounce off of this SC. I like this SC because it's based on an engulfing, and the engulfing SCs are probably my favorite SCs, the only ones I would probably use. But we are externally bearish. We reacted from the 71, which I'm eyeballing that, but I'm 95% sure it's a yeah. We're bouncing off of the 70 there. Internally, we have this 3-pin pattern. So I'm actually not only aiming for this previous low, but I'm probably aiming for this previous low as well, because this is the internal low into high that led into the 71. So I would want, if I was to be bullish from a longer term scheme, I would want to see this be manipulated. Where is, I would want this to be manipulated and then we get a move to the upside. But either way, that's a long time away. But for the most part, I know that I'm bearish on like almost every scale. And there's very clear equal lows here, which is what I'm eventually aiming for. Like this is what I want to be taken out. Especially after today's closure. Like after today's closure, today's weekly closure, like I'm very, very bearish on this. And this defies my bias for DXY, but that's because of just all the RBA stuff going on. Like everything is just going to shit. Everything's super weak. But so I know for the most part, I'm bearish on a bigger scheme. So if from an intraday POV, I can get any type of sell scenario, then I'm gonna aim for that low, like it because it's gonna hit eventually. You know what I mean? And I'm obviously scaling out as I go. But the reason why I was looking here is because we were manipulating. I mean, we were playing based on a potential manipulation in the Asia range, and we're tapping previous structure here. Right, as you can see here, previous low. We're tapping that, but internally, right, we're manipulating here, right, where we have the internal high, and then we have an order flow disruption. So I'm using this entire range to take me lower to at least here. And then if it breaks through strongly, then I'm gonna go for those lows. You know what I'm saying? So um that was my general thought process with this. And it actually came back and tapped the M15 here. The M15 was this M15 candle here. That was my entry. I just left a limit there and it ended up giving me a move to the downside. But then I ended up moving my stop after this break. I moved it here because I knew that if we started to come back up, that's like kind of disruption, structural disruption and order flow disruption. So from there, I would probably be bullish. And that's why you got the bullish delivery here. But once the order flow completed, now that we're in New York session, we had the engulfing and there's actually a bearish sweep here, but I wasn't up at the time. So there's no way I could have caught it. And by bearish sweep, I'm referring to this because this internal range broke structure here. So we had the sweep engulfing, but I would have wanted to like see a bounce back up here and then take the SO there and then take it lower. But either way, I wasn't up for it and I wouldn't have been able to catch it. So this is just one of those scenarios that I'm not going to say it doesn't make sense, but I'm going to say that it was not possible for me to catch. And that's okay. And I'll gladly take losses like this because the only way that I'm going to be ever like just bothered with a loss is if I get wicked out and then it immediately goes in my direction or it kind of has a transition after that and then it gets the big move because that's kind of in my control. Stuff like this is kind of out of my control because I did move my stop to a break even. So, but I didn't catch the move. So I guess you can call that a win. You can call that cope. Who knows, right? But all I know is stuff like this happens, and it is gonna happen. Kind of accidentally won this because my validation was yesy, and that's actually a great rule to have if that's how you do it. If you put your limit what above this SC here because the SC was on M30, I believe. No. Uh, where was this actually? H1? Oh yeah, I use the H1 wick here. So if you take this scenario, this is actually if you guys are this type of conservative, I can actually like praise that. Whereas it doesn't matter if you take a scenario here or here. If you take your scenario here, because that would be order flow disruption, that's actually like one of the best, most conservative ways to trade. Because you're thinking in not only the internal position, but the external invalidation, if that makes sense. So is this what you're referring to here?
Yeah, I was surprised by those three drives up because I was ready to trade off the first one anyways, but my
Uh-huh.
stop loss wasn't based off of the break of structure on a smaller time frame. It was based off the larger.
Okay, that's good. That's good. If you keep going like that, that's actually perfect. Because the only cost to operating that way is your risk to reward, but who cares? If you're winning, you're winning. Three drives. I don't really operate on three drives, bro. I don't operate that way. Because sometimes you'll get one drive, sometimes you get two, sometimes you get three. So I'm kind of just trying to play based on the order flow and the timing. The timing is also like a big thing. Um, but scenario number two was UCAD. No, I'll come back to this. Oh, it was here. I was looking at this here. So in this scenario, I was looking for manipulation of Asia range and a small order flow completion or small transition internally. So the transition happened here. And I kind of got into this a bit quick. Like I kind of rushed myself into this because these highs just looked way too perfect. That's kind of like the main thing I was looking at, weak order flow across the board. So the fact that I saw bearish break of structure, pullback, internal OFD, and then the internal break here. I took my position based on this, right? And then as soon as I saw this move to the upside, I had actually moved my stop here. Just because I thought that was it. I honestly I thought that was it. I'm like, I'm gonna do this, and I'm gonna go to sleep because it's like 2:30 in the morning for me, and just see what happens after that. Because I'm going based on the internal transition, Asia manipulation, bullish POI, and external direction being bullish. Right. And then obviously I'm aiming for the previous high. You know what I mean? So unfortunately it didn't go until like New York. And I wouldn't have been able to catch this one either unless I was actually like being very attentive. But something I'm always 50-50 on is whether or not I should take a position if there's a transition, but there's equal lows. There's always like a bit of doubt in my mind whenever I see scenarios like that. Um, but for the most part, I don't think I would have been able to take this trade. So yeah, unnecessary loss here. Well, I wouldn't say unnecessary, but just a loss. Um, and it's just annoying because it ended up giving a big move. And I don't even think it would have hit my target, but oh well. But yeah, anyways, those are like my two big losses for the week. I think these happened yesterday. Yeah, yesterday, like or last night. Not last night, but like 2 nights ago. Um, but I was actually looking for more scenarios last night. I was looking for EU continuation. Oh, and then I did take this. I'll come back to it. Excuse me. And I was looking for this. I was looking for hopefully a manipulation here. These highs looked way too clean, but unfortunately, yeah, it didn't. It did not occur. Which this I'm 100% fine with because I'm always hesitant to play within the Asia range post London. I'm always like during London, I'm always hesitant here because my thought process here was like, okay, internal low to high, even though yes, there is a sweep there and yes, there is a breaker structure there, I would just hope we get a manipulation to take that high out and then give the bearish move to the downside. But now all I know is that in the future, this here is going to be a very good target. So that's all I know. That's all I took from that. And then there's potentially weak order flow there I can take partials from anyway. But yeah, this ended up continuing way further than I thought. So that was and then EU, I was looking for the continuation here and it missed my 70 by like a pip, half a pip. Yeah, so that was unfortunate. Um and I didn't see this, but if I would have played this during London session, this probably would have worked out. Um, the reason being is that this momentum here, momentum is a big thing. It's always been a big thing, as we can see here. Once we get that bullish momentum, and we actually, I don't know if we swept there. Let's check. Okay, so we didn't sweep there. So this would have been equal lows as well. So it's equal lows that we could potentially come back to. Um, but I was actually, if you guys can see here, I was targeting equal high, relative equal highs up here. So that would have been my target. So if I would have taken this, if I was awake, my scenario would have been after this, we swept, we are sweeping Asia low, and then we have the internal sweep here, and we have the high momentum. The candle's pretty much what's giving it away completely. That's the scenario I would have taken. And I would have probably taken something like this. My bad, guys. You guys, please make sure to mute those mics. But yeah, I probably would have taken that with my invalidation at the low. With TP1 being equal highs here and TP2 being the highs that I'm looking for, which is all the way up there. And this is why I've been trying to mix up the higher time frames, because I'm gonna take, like, let's say half of my position at the range high here because that's the target of the sweep. But that's also why I'm trading sweeps as continuations, because I want, the whole point is to catch that transition, that transition, which this by definition is a redistribution reaccumulation, right? I'm not catching the full shift like I did earlier in the week, which this would have been here, right? I'm not catching the full shift here because this is a reversal based sequence, the accumulation. But this would be a reaccumulation model. But I'm not having to use volume. Um I'm not having to use drives. Like, I'm not having to use all the lettering, all the volume stuff, right? I'm going based on order flow, timing, and models, right? And I just find this to be way more efficient because in theory, Wyckoff is obviously like the root of everything, but in practice, right? I like my models more because they're easier to apply and they're, in my opinion, a bit more comprehensive to use in real time. So that would have been this here, 1 to 8, and then the initial would have been like a 1 to 3. So that's that. And then I did take a small scalp here, if you guys can see. This was a M3 implied sweep. So this is kind of what I mean, where we have CBOS continuation. But the biggest reason why I'm looking for this scenario here is because we've broken these levels of structure. Like, this mitigation here does not matter. You guys know for years I've been saying that I don't care. I don't like 90% retracements. Like, I don't want to see something go all the way to this big retracement and then go down. Well, that's actually a bad example, but um, I don't want to see something go like this. I rarely ever see stuff like that, just because momentum and distance is like a big thing to me. And I was low-key looking for this at first, but it didn't matter to me because we got the manipulation here where we had the M3 engulfing. Um, and after the M3 engulfing, I just took my position there. Implied sweep, and obviously, like I said, I'm aiming for this low because if we're looking at internal structure, you have low, high, low, high, low, unwillingness, break, right? And then we have CBOS continuation. So internal structure is bearish. So I'm aiming for this external low because of the structural disruption slash unwillingness. If we're not going to break the high, we're going to go for the low. And so I just got CBOS, implied sweep, delivery to the low. And it was kind of a perfect exit, I think. Yeah. So that's also a big plus for me. That's how I know I did my job right here, when my exits are perfect. Because my entry was perfect, so my exit was perfect as well. Um, but yeah, also I did mark up the XY here. This is kind of what I was looking at with the EU continuation, the XY M30. Let's see how that played out. I actually have not seen this. Yeah, see, it played out perfectly, right? Pretty neat. Pretty neat. But yeah, any questions, concerns with this stuff? We're gonna have a very strong closure today. That's crazy. We finally swept that high we were talking about. And if this just melts from here, that would be insane. If I'm being 100% honest, that would be insane. I wish I would have held the lows here. If I would have held my buys here, that would have been really nice. But cool. Any questions, concerns before we get to case studies? Yeah, I wonder how this is doing. I was hoping we would get a continuation today, but it doesn't look like we're getting it. But yeah, hopefully. What time is it? 12. That means H4 is done. Oh yeah, fuck that. Never mind. Fuck that. I'll wait for next week. Um, yeah, any questions, concerns before we get to case studies?
Fredo, hello.
Yo, uh-huh.
Sorry. Yeah, thank you very much for walking us through that. So I wanted to ask, what was the best approach to actually rewire your brain to stay off chasing reversals? Because I kind of struggle with this for a very long time now, in which some week I kind of get it right and I'm in that high level where I know this is I'm in line with the trend. But in some weeks I kind of get it mixed up again.
Mm-hmm.
Then I go thinking the same old way. I was I've been trading with Barca for a very long time, and I'm trying to change my psychology, my thought process to following that trend. But sometimes, like currently, for example, EUGU, they're at a very, very discount level. But I know I should be buying, but I don't want to chase reversal. So I was looking at continuing the trend, and I end up taking losses. So, like, what's the best approach to actually wire your mental psychology to stay off reversal and stick to the trend? If you understand what my
I
question
mean,
is.
I mean, stick to the trend is relative, bro. What does that mean? There's five different trends working at the same time. Like when sticking to the trend, it's relative, bro. It's when I think of a model, when I think of my trades, like that's why I'm very specific with when I trade, right? Whether it's like my Asia kill zone, my London Open or pre-London Open.
Like, asking the
Uh,
question?
sorry, no. So that's why I focus solely on a model at a specific time, and then based on the intraday direction. Like I focus a lot on intraday direction. Like here, we can say that we're probably bearish, right? You can say we're probably bearish here, but I'm paying attention to the internal model that's occurring, right, in my intraday perspective, right, at X times, right? That's why I get my winning trade is because I'm trying to catch the session volatility at an intraday POV. Because I can probably do this at a swing too, but at a swing POV, I'd have to wait a lot longer, and I would definitely have to um adjust my models a bit because I don't have the time aspect on a daily time frame or like on a weekly time frame. So like I don't really understand what your question is, but the it's my intraday trading to me in conjunction has to be models, timing, um, well models and timing, right? Because I'm only focused on the intraday direction at a specific time.
I see.
Because I like you'd have to show me an example, and like if you show me an example, then I can probably help you a
Maybe
little bit more because it at the same time trading is always case to case as well.
Like I think I have some case studies. Let me show you.
Like there's a
I just
I have sometimes run issue where I want to play within a manipulation of Asia within Asia range, not the manipulation of Asia range. And sometimes they play out, sometimes they don't. But maybe it's just better for me to avoid trading within the Asia session range outside of like AU. AU is the only one where I would probably do that. But for example, here, right? Uh,
Can I ask you a question
like
on
here,
something you
here,
just
this is what I
stated?
mean. Yeah, hold on. This is what I mean here, right? Like I don't want to play something like this because it's within the Asia range, but it will play out enough to be to be an option. But for me, it just may not be worth it.
mm.
Like that's one of the only issues that I come with my timings and stuff like that. But like I said, I don't really understand what you're asking me. Like, how do you stick to the trend? Okay, well, there's five different trends working at a time. What kind of trader are you? What times are you looking at the chart? Are you scalping, intradaying, swing? Like, it's a complex question.
I think probably when you have a look at some of the case study I actually sent, probably you have an idea of what I'm talking about.
I also want to elaborate on this question with a little bit of something that you said. Because I think this thought process kind of came a little bit towards what you said in your last webinar, which was you're correlating between how you got into a EU trade with DXY and how it's like really correlated. So I've been trying to really pay attention to those indexes before trades because I think a lot sometimes when I'm taking a lot of losses is more so not because of the direction being wrong because it would still play out, but it would probably be like what I would call the timing and then waiting for the transition
Hey,
and
Ronaldo, brother, come on, Ronaldo, come on, bro. Yo,
but
sorry about that.
no problem, thank you. Um, but it would be waiting for the transition. And I think there was something on Discord where somebody showed a trade and why it lost. And I'm sure it was probably just because of they didn't buy in the discount or premium, but it was a 1 minute chart. And I think a lot of what was being shown was yeah, you might get that break of structure, you might have the direction, but the invalidation point for that trade might not be 100% correct because I didn't get the transition yet for the order flow to like truly change directions yet.
And to shift the
So I was,
invalidation.
excuse me, I'm sorry.
And to shift the invalidation as well.
Yes, because I
Mm.
could then take a better R&R when I do move that invalidation, when I do get that break and that transition. And there was a great example, I think, when I posted, I posted a loss. It was a GJ trade. Um and I pulled it, except my validation was wrong. And somebody put the exact same trade after waiting for the transition with an engulfing, and their transition played out perfectly. Same trade, and they even got a better R&R than me.
Exactly. Exactly. And that happened. Now, yeah, you're good, Ronaldo. Don't worry about it. But yeah, that's actually one of the biggest like shifts for me personally was learning to wait for the full transition because if you the reason why you don't wait for the full transition is 100% FOMO. 100%. Like you think you're gonna miss out on the trade. You're like,
Hell yeah.
oh, maybe my sub position already went down, and you're like, fuck. Like that's the biggest shift for me because the it's 100% FOMO. And like the reason why I think I've been having a lot more conviction, especially with holding my trades longer, is 100% detachment from the chart as a whole. And that concept is a bit hard to explain and like to conceptualize because like what do you mean be 100% detached? I'm like, yeah,
No,
you like
it takes losses, honestly, is
it takes
because I
time,
think
experience. It takes experience, not time, because you can look at charts for years and not execute, and then once you start executing, then you're still gonna have to start at day one compared to the same person that started executing from day one, right? You just have to
mhm,
keep executing. You have to keep following the plan and adding the complexity to the models by not just having a model, but having the timing and having external direction maybe help you too. Um,
One
then
thing I can say is,
uh,
not to
mhm.
cut you off, but to
No, yeah, you're
probably
good. Mhm.
add to somebody who might could to be where I'm to who's facing what I'm facing, um, is I feel like one thing that does help when I am experiencing that because it will still go through and I'll see the transition go through. I think
Mhm.
the biggest thing that's kind of helps a little bit is like for instance, um, t- like you how you have I'm starting to trade more off the 1 hour and off of closures, and
Mhm. Mhm.
and then going to the 30 minute, and I like how you have the 10 minute, and I've been looking a little bit into the 8 minute because it helps me look at like momentum and transitions a little bit more.
Yeah.
But I try not to go lower anymore because I keep getting like wasted.
Yeah.
But
I try not to go below M5 these days.
yeah, and then
Yeah.
and like I get it what you mean because it's just like well I like I said I came from another group from somebody who learned from you and their biggest thing was saying experience too, and they would explain time as just things I
Mhm.
must experience.
Who
So it's
was
just
it?
like whew, man, I'm probably gonna have Matthew. I think that's his name.
Matthew. You talking about Trade House, Matthew?
Yes.
Oh, okay, okay. No, I didn't. I don't think I learned. I don't think he learned from me, but yeah, I
It,
know who you're
it,
talking about.
but he
Yeah.
definitely was telling me something like
Mhm.
that. So I try to keep that in mind whenever I face a slew of losses or just feeling like, dang, like I
Mhm.
got it, but why did it go wrong?
Yeah, that's also why I have this here. Like, if we look at my trading view, that's why I built this into the indicator. If you zoom in here, right, the structural level of each time frame. Like, the scalp time frames are M3, M5. My micro time frames are M1, M2. You see what I mean? So that's why I kind of tell people to just kind of stay away from M1 for the most part, because like even I will make the mistake of forcing a position on M1, whereas a reversal BOS on a micro is a continuation BOS on a scalp, and a reversal BOS on a scalp is a continuation BOS on a minor intraday. You see what I'm saying? So if I'm gonna be a scalper, then I have to stick to scalp timeframes to execute and to like manage and stuff like that. So that's kind of like one thing that I fixed up is making the M1 the micro, because and anything below the micro like like 30 seconds and all that, and then the internal structure below that, I don't even care about that. That stuff doesn't matter to me. Like 15 second, 5 second doesn't matter to me anymore, because I want to catch an intraday move. And if I'm focusing on, let me see, if I'm focusing on the micro, the scalp, the minor intraday, and if my biases are coming from the major intraday, then in order for the micro and below the micro to be relevant, this stuff here has to also align. And to have four levels of structure align while this one isn't in alignment is a very rare situation. Because most of the time, I'm looking at right the micro going against me, the scalp being in my favor, the minor intraday may not be in my favor, but the major intraday could be in my favor. And this is enough for me to even get a winning trade because of the timing, because of the momentum that's coming at the certain time, etc. You know what I mean? So, like for example, let's look at this case studies.
This question, then
Uh,
that makes perfect sense. Um, Now with that being the case, how do you develop for yourself your own time, like your own kill zones, your own because especially with timing being a factor that like we can all see on a chart and we all understand, what is happening when we see it, even if we don't have it like confirmed all the way, even when we are forming our biases, even our timing is sort of a bias. So how do you kind of like
I go
then
based on
create
opens.
opens, okay, of all of just any and every session or just how a session impacts another session?
Well, I'm a
Because
scalper, so I could do every session.
mhm.
Intraday trading, I'd probably like rely on London and New York. But if you scalp and you do intraday scenarios in London, New York, then you can get really high risk to reward. But with the Asia ranges, I do like to the Asia kill zone. I do like to only look for scalps there. I can get a quick 1 to 3, 1 to 4,
Do you
kind
have a
of like
rule
I
of
did
thumb?
with AU. Like I did with AU. I think I showed it to you guys here. See,
Mhm.
this is like right after my kill zone, but it's during the Asia session, and it played out. before the Asia close, because the Asia close for me is at 12. That's when I have my Asia range close here. So right before it closed, this is all during the Asia session. And I was able to get a good scenario. That's why I even bothered to look, because there was just a big belief going around that you shouldn't trade Asia session, you shouldn't do this. I'm like, says who? Why? Like, you know what I mean? Like if the model is fitting, if the model works, then the model's gonna play. You know what I mean? Um, and why not? Like there is Asia markets operating during the Asia session. So there is some type of volume coming into the market. How much? We don't know. Like obviously not completely. But that's why I probably wouldn't trade GU during the Asia session, because I'm looking at pairs that can move, that have the potential of moving during Asia session, which is like my AUDs, my NZDs, um, and stuff like that. So that's why I really primarily like look at AU and like gold during those sessions, because AU and gold are semi-correlated. But let me find this here for you in CST. So here, Tokyo session for me is an hour before my kill zone. My kill zone's from 7 to 9, like my time central. My London session, I look at the open, which is at 2 a.m. And then with my New York sessions at 7. So that's why I have like from 2 to 3 as another potential kill zone, because that's when the London volume's coming into play, and from 7 to 8 because that's when the New York volume is coming into play. So it's not that I found them. It's just like I'm just trying to use logic. Like if this is when the markets are opening, this is when executions are being taken. So then I'm trying to see the shift in momentum, the shift through models, right? And especially like engulfing. That's why engulfings are like a big thing to me during these times, because this is when volume is coming into the market. And
Understand.
the reason why I use like 7 to 9 here, and the reason why I like to trade like I like to trade 2 hours before London, is like it's the same theory behind like a news event will present the direction before the news event releases. Yes or no? Majority of the time. Can we all agree on that?
Yeah.
To
News
some
excuse.
extent, right? Like if you're looking at intraday timeframes, it'll usually follow intraday, major intraday direction. Then I'm using the same logic to for my timings, because if obviously it's not just going to randomly choose a direction like during the session opens, but I am seeing a lot of the time that a move for London session is going to prepare itself in between my Asia and London, right? Which is, I think there's a Frankfurt open between that, but I don't know. I don't care. Um, like for example, EU yesterday. Well, actually, no, this presented it before. Let me see it. There's various times that I catch. Um, let me see. Sorry, get a good example. Okay, well, these examples aren't happening today, but or this week, but a lot of the times I like to take sweeps based on right here, right? A move will prepare itself before London open, as we can see here, right? I'm catching the London momentum, but just because I'm catching the momentum of the session doesn't mean that it's going to set up during the session. So just as I'm not going to catch the transition of a news event when the news event releases, that means that the setup is presenting itself before the news release. So just as I'm trying to catch momentum, the setup has to prepare itself before the session. Does that make sense?
Yes.
So that's why I use those kill zones. Like this is probably my favorite window to trade these days, is like that in between. Like I'm sacrificing sleep for that, you know?
Mm-hmm.
Um, because if I can manipulate the Asia high on a bearish direction and have an internal transition and have a proper invalidation, then I'm going to catch the London volume if the direction is to continue. But obviously, we can't know that until afterwards. But yeah, that's like the whole like logic behind that stuff. So yeah, so I didn't find them. I just assumed them, if
Mm-hmm.
that makes sense.
No, I would see the red
Mm.
boxes and I would just, I guess, assume that, you know, whether it was your
Mhm.
set times or whatnot, that that was just it. But
No,
I get.
this is just like the open. So I do 4:30 Central, which is 5:30 Eastern,
Mhm.
to 12 my time, which is 1
Right,
a.m. Eastern. I
right.
do that, but I don't do the 4. I don't do 4 to 4:30, which is like the day of the new day open, because a lot of different brokers use or like have different manipulations. Like maybe one broker manipulated all the way up here, right? And I use FXCM because it's the least manipulated just by going through the list.
And you said for Eastern it would be 4:30 to 1,
Yeah, like here, you guys can just see this.
which makes
I should.
sense.
I'm gonna split up this indicator, and I would just probably make the sessions one free, like just so you guys can have it. But yeah, this is it.
Question:
UTC 0.
will
You can
information
just screenshot that.
like correlation of time in this way show up in like the fundamental ebook?
No, That's more macro.
Mm,
The technicals and fundamentals are two different things. This is a technical thing, not a fundamental thing. Outside
mm.
of, I guess, the fact that executions are coming in at this time, but I wouldn't be able to explain that in a fundamental way. Outside of the fact that this is when executions are being taken, because that
Mhm.
did spark my interest. That exact question sparked my interest like a couple of days ago. Where is this? I asked. I'm like, why does New York's for FX start at 7 a.m.? Because obviously the New York Stock Exchange opens at 8:30 in my time, which is 9:30 New York time. So I looked this up. Um, okay, well, let's see, 8 a.m. EST. You see?
I kind of an answer for that as well because New York pre-market is before 8:30 our time on
Oh,
Central
true,
Time.
true, 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 true. Pre-market is a thing. I didn't know pre-market was a thing. I don't trade NQ and all that. But yeah, that makes sense. But
Well,
yeah, it
just
was
for
just a
any any
question that I
any
had.
any equity, like you can go in and you can buy Apple stock before open. It's just New York pre-market session.
Oh, really? Oh, really? Oh.
Yeah, and a lot of so I've gone down this rabbit hole prior too. So a lot of hedge funds are actually making really large dark pool trades and large moves pre and post market. So
Mm.
that's the rabbit hole I've gone down as well.
Okay, interesting. But yeah, it's something that I wondered. But yeah, I guess it's pre-market open then. 8 a.m. Eastern is pre-market open, right? Is that correct?
Yes.
Okay, perfect. Okay, that solves that. But yeah, that's why I have. So I'm actually probably going to change my indicator. I'm probably going to make the New York gap, the overlap, which is like 7 to 11, which is 4 hours. But back in the day, I used to only ever trade like 7 to 10 a.m. But I just thought I was holding myself back, because I have enough conviction in my setups. So from here on, I kind of honestly, like, these days, like, if I see a setup, I'm probably gonna take it. Like, why should I not? Is a question, you know?
And there's
Um,
another aspect of that too, because the 8:30 open still has, and I don't know if you pay attention to options contracts, but I mean they do in part
how?
move. It's volume, it's liquidity, right? But
Hmm.
um, the overwhelming majority of options volume is 8:30 because that's when you can trade the options. So
Oh,
even
okay.
even standard volume still comes in at 8:30 New York Open, but as far as share buying and large share buying, yeah, it still will occur. And I think Mike put in the chat, penny markets, they move a lot pre and post.
Okay, interesting. 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 But yeah, that's actually interesting because like a lot of the times too, people want to catch the trade of when the session opens or when the stock exchange opens or when London opens. But you can also play based on what happens on that. Like, I don't know if you guys noticed, but I've seen in a couple of members too, like they a lot of them even prefer to wait for the open to happen to give a reaction and then play based on that. And then they'll play like the PM session, which is like 3 hours after open, after New York Stock Exchange open. And that's actually another way to go about it too. Like just because we know that the market opens at this amount of time. That doesn't mean that we only have to trade before, but we can also trade after. So that's what also why I'm like, if I see a setup, I'm gonna take it, right? But anyway, let's go ahead and get into the case studies. So here, right? If we're looking for an intraday high, right, then I want a transition after the CBOS, because you could say it's a CBOS, right? But this range here has not been solidified. If this is a bullish range, which I think it is here. So I want always a discount, and then I want a transition maybe to then go higher. Like that's just kind of like the gist. Because here clearly we're buying way too high. And it's also what happened with like what I said yesterday and when someone asked a question, which is it was the oil trade that they had showed where he's trying to sell a continuation, just an order flow continuation, no model at a discount. I'm just like, that's not the best idea. And then here it's like, look, if you're only taking this trade based on M1, this is not good. Because you're looking for a swing target just on M1. That's what I just said with micro, scalp, minor intraday, major intraday, swing. You're looking for a swing target with a micro move. So now all of this stuff needs to align perfectly, which will more than likely not work. Most of the time it won't work. But it does look pretty the one time that it works, you know? So we can't be hasty in that manner. Because all I'm seeing here is M1, M2. M1, M2. That's all I'm seeing. Oh, sorry, Mike. Sorry, Mike. Let me come back to yours later. Let me finish these. $30. Okay, you see here, this makes a little bit more sense because you're at least selling, right? Like you're the same buy that you just took would have been a sell down here. You see where there's a break and then you try to look for the move down. But this will not work because of we're in the discount. All right, so this one, at least you're waiting for some type of pullback. And then hopefully this is like during London Open or something like that. But yeah, this ended up not working out too. So the scenario, you got the right idea. Now it's just a matter of also distinguishing a sweep with a break of structure. So for here, we've broken this and we have a clear bullish range. So my question is, why are you selling here and not buying here? Like this is the question that I used to ask myself, because we can't just be reversal chasing. That's why I look for my intraday scenarios. Like if I have an internal bullish range, I know that if I'm bearish, right, I not only need this to break, but I need the order flow to complete again and then break. Then I can take a sell, because then that's a shift internally and it's a sweep externally, and external of that is bearish structure. So if you can have 3 levels of structure aligned, that's kind of like a good plus. But here, there's very clearly low, high, retracement up. So until that changes, I cannot justify a bearish move. So I would recommend to you, stay off of M1 for a bit. Stay off of M1, see what happens. Look at M5, look at stuff like that. See what can see what you can get from that. Because once again, you're reversal chasing on every single scenario I'm seeing on M1, you're reversal chasing. Right? Like this is a CBOS, low, high, retracement, up. You know what I mean? And this mindset is one of the if once you break this mindset, it's gonna change everything completely. Because eventually you're gonna get sick and tired of chasing these reversals, and you're gonna be like, why the fuck am I doing this? You see? Reversal
Yeah.
chasing. This is bullish on every scale. I just don't know why we're selling here. And I'm not saying to buy here. That's also not what I'm saying. But I'm saying this is not bearish. I'm not saying you should buy, but I'm just saying this is not bearish. This will be bearish once this breaks.
Mm.
So I would stay away from M1 for a bit, bro, because it
Um,
looks like you're making the same mistake here. Yeah. So you
So
see
why?
now this broke. So you see, look. You see now that broke. Now it broke. The final push up. That broke. And then guess what? Now you can sell. And you can't see these moves on M1. You'll see these moves better on M5, M10, and 15. Because you also the easiest way for me to reference it too is like lows that create highs. Look at lows that create highs externally. Because yeah, you could say there's the internal low here that created an internal high, but I don't care about that. I care about the highs and lows, the pivots being pivoted, if that makes sense. Low breaks that external high, then this low broke that external high. So if that breaks, then okay, now I can shift. And this would be a high risk entry, but it's justified. And then you have the conservative entry. Equal lows, right? And then we sweep external. And then this here's the sweep model. This is a sweep model here. We have a bullish range, equilibrium, right? We sweep, then we complete order flow because this is just a CBOS. So that's completed. And then once that breaks, then potentially if you can catch a buy, then we can aim for the high. Or if there's like an engulfing, maybe like on M10 and 15. But yeah,
So
you're just looking for the reversal there. It's not good.
why I actually saw this was just because on the higher time frame, I just thought like there was a higher that gave it a leg up, and this was more like a pullback. Then yeah, the entry here was because we have the CBOS here. Then this is more like a reaction that gave this move and took this high. Then we broke this low again. So that's why I sold here to
No, I
take.
100% get I 100% get why you're selling, bro. I 100% get it. But I'm telling you, this is still bullish.
Mm,
It's still bullish. It's still bullish, right? Then it breaks the reversal BOS.
yeah.
And then obviously here's like another reentry.
So based on these, like, what's your like for let's say for a 5-year-old, what's your best recommendation to stay off to have this to take off this reversal mindset? Because I've been struggling with
Stay
it
off
for
the
a
M1, M2. Stay off it.
okay.
Because bro, you're telling me, yes, you're telling me this could be from a major intraday. Like I'm saying this again. Your major intraday, you're saying is bearish,
Yeah.
but you're on a micro time frame. This is a micro time frame, not a scalp time frame. So now you need the scalp and the minor to perfectly just fall in line, which is not likely. So why not just focus on the scalp or the minor intraday based on a major intraday structure direction? And then you'll just focus on those time frames rather than focusing on the micro and scalp. Maybe you can just focus on the minor intraday. And when these two align, maybe now you can aim for a swing target TP. It's just I just want to break the logic. Like I want to break the mindset of why the fuck are we looking at M1, M2, M3, M1, M2 if we're looking at a major intraday bias. Like we can look at it too, but like if we're gonna do that, then you have to be very conservative because it just doesn't make sense. It just doesn't make sense to me. And I've made the mistake too. That's exactly why I'm telling you because I've made this mistake.
I see.
And you see here, like we're selling this one. Okay, maybe this one actually could maybe work out. But we're seeing the sweep, the CBOS here, but this is still bullish. This is still bullish. We have a high, low, high, right? Once this breaks, that solidifies high and low. So I should be looking at pullback continuation. You see what I'm saying? But this can, like, I'm not saying this doesn't work or it won't work. It could work because I do like the momentum here. But I mean, I'm sorry, I don't like the momentum here. That's why I'm assuming the bullish sign. But this is kind of what I look for. Like, this is exactly what I look for. is I don't care. Because I'm sure that you're noting these levels of structure, if I'm not mistaken. I'm positive you're looking at these levels of structure. Low high, low high, low high, low high, right?
Um,
CBOS, and then maybe you see internal shift, so bearish, internal shift, so bearish. But this actually just broke. So why not be bullish here? Because that aligns with the external.
Mm.
You know what I mean? So
Isn't that also an
mm,
internal sweep
yeah, it
right
is. It
before that
is
high
internal
broke?
sleep. Internal
Right
sleep. Yeah.
there. I see the
Yeah,
internal
exactly.
transition
Yeah. So I'm sure this is bullish.
in an external
Yeah.
point of interest. Like
And
it's a
you have a
bullish
bullish
reaction.
and the bullish engulfing is kind of giving it away there. But yeah, you're not gonna see this on M1. Like your M1 is gonna confuse you completely if you're only looking at if you're looking at it this type of way, because you're trying to mix a level that's like 3 levels ahead of a scalp or of a micro, sorry, as your directional bias, but you can't apply that on micro because you can, but the odds of it working out are way less compared to if you mix the minor intraday and the scalp.
Mm.
M1 is noise when not considering external. Exactly. Like people say M1 is noise. No, M1 is noise when it's not being considered with other things. Right? It's like an A plus B equals C. Like the same thing what I said earlier with support resistance, Fibonacci, all these traditional strategies, they work when applied with liquidity, when applied with manipulation. Because you have to focus on market drivers, not market just not just like ideas, if that makes sense. Because really, I'm just trading lines and boxes, but I'm using theory and logic, which is through liquidity, manipulation, etc. So yeah, so I would say just get away from M1, M2. Start with M5, maybe look at M15, and then maybe look at H1. Like just simple, make it simple.
Okay.
Mm. All right, let's go through
Okay.
the case studies now. Hmm. I like this here. I like this internal sweep, which could probably give you a reaction, but technically still a little bullish. Yeah, nice. So did you note this? Did you please tell me you noted this little transition here? Because that's really what gave you the trade.
I mean, actually, this one is the result of two losses because I took like right before
Uh-huh.
where I can pin here. Okay, here I try to sell here and here, and I knew that this one has to go down because I was looking like the like the volume, the volatility, and as soon
Hmm.
as I saw that this one took a gain, so then I thought about what you were saying, like the A, B, C, D
Yeah,
concept,
the order flow
which
completion.
here finished. Yeah, order for completion, exactly. And from there on, like I thought that at least we have to come back here.
And I think this didn't hit. I don't think it hit completely, right?
No. It was
Yeah.
before. It was right here.
Because let me show you this. I was looking at this earlier. I would have really wanted the second execution, but like if we started the pullback here, we have a low into a high, low into a high, low into a high. So until this breaks, that's now bearish. So really, if we just this is like the shift that I'm trying to talk about. Rather than trying to sell here, try to sell here because that's after this has broken. And then now you can at least have a point to reference as a potential first TP, and then and then just hold the rest.
Yeah.
But if
The
we
problem is
can, but this is
the
the
fear of
this is the
missing
true
out.
entry. Exactly, the FOMO.
Yeah,
And
exactly.
yeah, and it's just gonna fall down to would you rather lose or not trade? It's gonna fall down to that. Because you're telling me that if you're gonna rush a trade, that means that you're willing to lose rather than wait. You know what I mean? So that's kind of something we got to get in our minds. And it's hard because you're going against human nature. That you're going against your own personal nature. So it's easier said than done for sure. Okay, you see, nice. The engulfing here is everything. This is kind of just the same scenario we just saw. Like I'm assuming the engulfing just kind of gave it away for you.
Yes, but also I consider that one as a like little structure disruption, like this one.
Yeah. Yeah. It is. Yeah. It is. Yeah, exactly. It is structural disruption. Very nice. It's structural
So and
disruption
then
because the
I
internal is bearish, but it aligns with the external.
yeah, and then I mark this one as an internal unwillingness. I did not consider the break of this one, but just the break of this one right here. That was on M3, I think.
Okay, good. Yeah, this is very good. I like this. But if I was you, I would just aim for here. You have equal highs. Maybe you can
I was
partial
scared
here.
of not.
You can partial here maybe, and then just hold the rest. Because it is hard to hold. It is hard to hold because then you're like, ugh, like I'm risking all of this profit to hit a break even or this, but that's the cost of wanting to anticipate a small pullback and then go higher. Like there's always gonna be a cost, but it just depends on also what levels you're acknowledging.
Having the patience to pull something like that and then still aim target when you're playing order flow in a way that's not like directionally 100, it definitely can make holding as when you're looking at partials or this or that something that you think twice about. I will
Exactly.
say that
Yeah.
I've been in that same situation and I looked at that same like those same trades because I got kicked by the first AU sale.
Yeah, and we can see there's always going to be a conservative entry. Like if we can focus on getting these conservative entries, these are A plus, these here are A plus because you have the sign of reversal here, but you have the confirmation after this break. So we can take this type of transition here. These are the A plus. These are like the ones I would bet 4% on type thing. Like because over the years, like this is also like what I'm adjusting to is with like risk management and all that. Like if I want to scale, I need a risk amount that will matter, but it's not big enough to hurt, if that makes sense. So like my number is usually between like 3 and 5%. Like if I'm trading like a smaller account, if I'm trying to flip a small account, then I'll do 5% risk. But then if I get over like a 5-figure range or like 10, 15K above that, going into like the 20s, 30s, then I would just stick to 3% ish. You know what I mean? Okay, cool. I like this one. I like this one. This is was this during New York Open?
Yes.
Okay, I like this one. I would personally take that one. I don't know if it won though. Oh shit.
Sorry, I put another. I
Oh,
think I
okay, yeah,
put
this would
another.
have lost.
Oh no, okay, yeah, it was a loss.
Oh, okay, yeah. See, I probably would have taken this, but I'm assuming we're dealing in a discount here
Yes,
externally. Because
yes, but I was
the
referring to the same trade of GBPUSD of last week because there was a similar scenario. Because usually when I see like that the price come back like so fast, I don't want to sell
high
because
momentum.
I don't like it. I'm not sure that the price will come back here. But GBUSD last week worked, so I was like, I'm going, I'm going for it because also was like 10 minutes time frame. So I was kind of okay. It's not like 2 minutes, 3 minutes. So like a little bit more real bull, let's say. But then went to loss.
Because I took a similar loss to this like last week. And it's falling down to the time of when the trade I'm taking is and the time frame. Like this is the M10. Like I would interpret this as a sweep on M5, but not on M10 because on M10 this is way more data. So this is probably like an H1 engulfing or something like that, like an H1 transition, like an H1 um like a hammer or an engulfing like that. And that's a note that I took because an M5 range like this is probably one candle on the hour time frame, whereas an M10 move here, this is like a multi-hour move. So that's just a mental note that I would take there. But this is also another mindset shift that I would want for everybody to take. It's just because we take the loss, sometimes if the invalidation is correct, that invalidation is actually a model. Like technically this is internal OFD. and then you could take the opposing OFD to equal highs, and then you recover. But that it takes a lot too, because you're kind of going against what you already was your bias. But at the same time, we have to realize, like, if we look at all of our models, I'm actually going to write this down. This is some free game for you. Let me show this. Here. If you look at all of our models, oh shit. Actually, no, yeah, I'm gonna do it on here. Can you guys see me as I'm typing? Can you guys see the sweep that I just typed? No?
Yes.
Okay, cool. Sweep, OFD, SD, LGC. Like, this is something that I think I mentioned like a week ago, maybe 3 weeks ago, actually, right? Every single model. So I have the set rules for structure, right? And for POIs and for all of that. Those are the set rules on how to read price. But a model is how I'm creating a sequence based on the concepts that are it's like having a glossary and then having a playbook, right? The glossary is all the terms, the SC and efficiency, structure, solidified points, etc. And then the playbooks are the models. But every single playbook is a failed version of X amount of concepts from the glossary. Like a sweep is a failed BOS. OFD is a failed POI. Oops. SD is a failed structural continuation. And the LGC is a failed reversal. Right? So every single like once I thought about it, like I'm like, why did I not? This is exactly what it is. It's not anything I've ever said before. This is what it is. A model is a failed something. Every single model I have. And they deal with every single aspect of everything in the RCV style, which is POI's structure. Right. And they're just different types of failures, which is kind of like applying inversion in real life, where like you guys know what inversion is, right? Like the mental model, the concept. You guys know what inversion is?
Yeah, I believe that's when we get that uh turnaround, but it's not like a reversal turnaround. It's more so a
Solving backwards. It's a solving backwards. It's not focusing on how to win, it's focusing on how to not lose.
yeah.
You see what I'm saying? Like, let me give you an example.
Is it
Um
takeoff related? I would say.
no, it's a mental model. Like, let me show you.
I thought you were talking trading wise.
No. This is a mental model, brother.
If this, then that, but then that, then this, basically.
No, it's thinking backwards, not forwards. The devil's advocate, pretty much. So like, let's think about this. Rather than figuring out how to grow an account, it's how do I blow this account as fast as possible? Note that, and then do the opposite. That's what that means. Right? Problem solving technique that involves thinking backwards by asking it's not what do I want, it's what do I not want, and then do the opposite of that. Because bro, just like look, some of us don't know how to be profitable traders, but we do know how to be unprofitable traders. So just do what we're already doing, but then do the opposite. Like that's a great starting point. You see what I'm saying? Yeah, it was popularized by Charlie Munger, RIP Charlie Munger. Made some incredible books. I think he passed away a couple of months ago. Um, but yeah, let me show you guys some examples so you guys can see. It's not how do I make money, it's how do I lose money and how do I not do that? It's like how do I guarantee myself to fail and then do the opposite? You know what I mean? And it applies to everything. Like how do I get fit? How do I how do I win people over? It's like, okay, how do I make them hate me? Then do the opposite. You know what I mean? So it's inversion, but in trading, if that makes sense, right? Where I'm using the concepts that I have and using the failure of those concepts as the models to execute based off of. Because these failures are what cause transitions, and those transitions are what create moves. And so I'm trying to catch a move when it starts. I don't need to catch the top or the bottom of the entire move. I just want to catch the top or bottom of that scenario, if that makes sense. But yeah, that's kind of like some free game there. Let's keep going. You have a question? What's your question? Did I already go through all of them? This is the last one, right? No, this is one more.
Yeah. Fredo, my question was about when you explained about the session. So mine was this. I wanted to know, is it like necessary every time you have to see a setup before the session? For example, a setup can be formed during a session and overlap time for me to catch a London move. Same applies to New York session. That's what you meant.
I'm sorry, I don't get the question.
Like you mentioned, like every time when there's a big move, usually happen before session. Let's say we are talking about London session, meaning we have to see a setup during London session or overlap time. Or if you are looking for to catch a New York session, those moves, we have to see a setup, or rather, a setup has to be prepared during London session for me to catch, let's say, a particular move during the New York session. I don't know if you.
You're saying does
it
it? You're saying does it need to?
Like, is it like necessary has to be that way?
Does it necessary? No, nothing is necessary in trading, brother. Nothing is ever necessary in trading. Nothing is ever absolute. You just got to go off of the hunch. Because okay, then if what you're saying is true, then why are people catching moves post overlap
session? Yeah.
You know what I mean? Why are people catching moves during Asia if you know what I mean? So like yes, but no is like the answer. Sure, but not really. Because you want to be very strict with how you take your trades, but you don't have to be that strict on when you take the trades, right? And but it also varies. Like it's also not that simple. Like it also depends on time frames, on targets. Like it's also very case dependent, if that makes sense.
Yeah.
But the answer is no. But the answer is technically no. Like I would prefer it to, like I would like for it to, because then I'm catching the volatility of the session, but it doesn't need to.
All right, that makes sense. Thank you.
Mm-hmm. You see here, let's see, is what's his name still on the call? Is H here? Yeah, okay, so H is still on here. So see, this is what I mean by focusing on continuations. Based on what you're looking for, you would look for a sell here. But no, we're looking for continuations because we have an LGC. And it actually, did this tap the sell to buy here? I think it did. Yeah, you see? Sell to buy. So this is good. And I like that you're using the Fib extensions. You see what I mean? Like if we're using liquidity and we're using market drivers, then it makes 100% sense to still use these quote unquote retail concepts because they're all retail concepts to begin with. You say continuations. Like I don't think this is a full break, but I do like that you have your validation here based on the POI. So this one, very good. And it's in the buy to sell, which the buy to sell is here. Cool. You see here, I like this. I would just start. I would advise to partial out, of course, because you don't know what happens after liquidity is taken. Yeah, I see you have the liquidity inducement theorem timing. Interesting. I think we have the same Asia session too. I'm not sure, but I think maybe they start
Yeah,
at
yeah,
like
yeah.
the open of the new
It is
day,
pretty
but I
much the
start at the
same with
30-minute.
viewers. Yeah. Oh,
And then I'm assuming you have London open and New York open. But yeah, this is good. I would just advise to take some partials. It's fine. Once again, yeah, this is nice. But are you taking partials along the way?
yeah, yeah. So basically, when I'm using like scalp structure levels, I usually prefer to. I've I've been observing it. Usually, it would usually get to Fib extension of negative zero
Mm-hmm.
618, but
Mm-hmm.
I usually take partial around negative zero
Okay.
0.27.
Mm-hmm.
That's why I usually take it.
Mm-hmm. And then just write the rest. Nice.
Yeah.
Mm-hmm. Good, good, good. Yeah, see, this is very good. Very good. Okay, so you took a re-entry. Nice, nice, nice. Nice. I like this. Yeah, no complaints here. No complaints on that for Geo. Yeah, you see, I like that every single see, I want you guys to know every single trade he's taking is a continuation externally. Like I'm sure, do you even care about like the daily and like the H4 and all that stuff? Do you even care about that stuff? Or you just kind of look at the intraday structure and continue?
Usually I look at intraday structure, but I also at some point I have to. I usually go up to 4 hours just to
Mm-hmm.
get the macro view of the
Exactly,
structure.
yeah. Mm-hmm. Mm-hmm. I see. And then just intraday continuation your way. That's good. You see, this is a good mix because you aren't really getting into like M1 and all that stuff. Because you don't
Yeah,
really
no,
need
I'm not
to,
doing
because you don't need to. Mm-hmm.
I don't know. Yeah,
Yeah, you see, these are all pretty good continuation trades, and they're all based on disruption as well. Like this move
yeah.
is occurring, even though we're bearish here, you can see the disruption. So you see low into high, and then you get the continuation. All right, hold on. Let me close out a bunch of these charts. Okay. Um, sure, sure. Got the reaction, and then it invalidates here. So you see, like, I'm not opposed to that, like what you said here with the sweep and then this continuation to the downside. That's correct as of when you're taking that scenario. But this transition here should tell you everything that we're going to go for highs now. Because now this solidifies this as a sweep. This is unwillingness. So you have low, high, retracement, and then we're completing. Um, no, I don't like this. This looks like a bearish structure, bearish breaker structure. You're looking at a reversal again here, bearish. You have a sweep here, and then you have a sweep here, and then you just broke structure. So I would want to sell here. Yeah, I would want to sell there. I don't want to buy there. I mean, bro, you're literally you're chasing a reversal on every single trade, bro. Every single trade. Yeah, every single trade, bro. It's a reversal on every single trade. How do I trade reversal then do the opposite? Exactly. Exactly. Like look at what you're doing. You're looking at a reversal. You have to realize why this is a reversal. Like literally, if you just do the opposite of everything that you're doing, of your executions, everything else is fine, but just the executions. You'll be fine.
So this is mine. I can post the results. I'm just curious, again, because we've gone back and forth with this idea that, the indices are just naturally bullish. Um,
Mm-hmm.
so when you see this preliminary, just curious to see your thoughts, and then I'll just post the results, because as soon as I post those links, I can put them in this chat and it won't post.
Mm-hmm.
There you go.
Mm-hmm.
And an overall question would be, um, I think the answer is NASDAQ's just inherently more volatile than SPX, but SPX was a pretty picture perfect model in my opinion versus the NASDAQ. This little sweep here, it's you've got a clear unwillingness into either a sweep or a break of structure. So I
Well,
just
there's no
want to
new
see your
high or
thoughts.
low here. It looks like there's no new low. There's a sweep here. So maybe if there's a sweep here, then a transition, then I could be bullish. And then here, yeah, I can't be bearish just because of this. Because of this. I don't like that. Like that
And I
makes
have,
me
yeah, because it's
think,
internal unwilling.
yeah. So like if anything, I'd find an excuse to buy.
So now click on do the SPX model before. I guess it's all going to show the outcome, but the SPX model that I put in the uh, Zoom chat.
Okay, nice. This actually worked out. Nice, nice, nice.
This was my biggest trade of the year, and I took partials at those lows, and I actually held for the entire gap fill.
Nice. This is very good, bro. Very good.
But if you
So
look at
you're
SPX, it's
mhm,
so much cleaner. And you're
mhm.
not going to see that sweep, and it looks
So and I like this because I'm assuming that you're kind of looking for sales as well because we're in a premium.
yes.
Hmm. Hmm.
But again, it's always in a premium, and typically I think all the other
Relatively, not always,
right,
relatively.
right.
Hmm.
The last
Hmm.
like four Zooms we've done, they've all been buys because I just force buys.
Exactly. Which is once again like the whole FOMO thing. Like people want to catch the reversal and catch the big trade. And this is actually this is good. What is the entry again? What is it a model?
This one was so that's why I said it's a case study question. Would this be an implied sweep? Because you don't have a
On
break of
which
structure really yet.
where?
Right there with that high being the
Oh, this high? No, because this low didn't create a new low. So maybe if
because
there
that's
was like
internal.
maybe if there was internal structure here that was bullish, and then it did that, then now I can look at this as a sweep.
Okay.
Like the sweep is always pro trend to the direction that I want to go to, but it's always some type of pro trend.
Even the implied sweep.
So yeah, like
Because I thought the whole point of the implied was that you're kind of taking it premature. You don't have
the implied is just the engulfing, but the sweep perimeter is always going to be the same. Like the range perimeter is going to always be the same. It has to have some type of bearish move, like it was with my trade earlier that I showed. Did I take it off? Oh no, it was on my trading view. You see?
yeah, yeah.
Hmm. Like there's a bearish range and a bearish move, and then the implied part is just the engulfing
Is the
or the
engulfing
pattern or
alone.
the pattern or the pattern because I'm implying this as a break of structure
Right.
or
Okay.
as a transition. That's what I'm implying. I'm not implying the range. I'm implying the execution.
So I think the thought process, I had the same thought process, just not an engulf. Because even here you're right, you're internally bullish with that.
Mhm,
And
mhm,
you're
mhm,
looking something like that.
mhm. But I can't be bullish here because of it's already failed here. So this is bearish.
It's failed where?
CBOS. This is a CBOS. So this cannot be bullish by any means. At least not as of what I'm looking at.
Okay.
Does that make sense? Like this cannot be bullish because of this break, because this break is a CBOS break based on
Okay.
high, low retracement. Um, any day. Okay. Oh, also too, this is a good example of order flow completion here, because you see how it completed the move and then it broke through. That means that the internal structure has shifted completely.
Okay.
But yeah, that's good. I
Because then you
probably
could do the
wouldn't take
side by
it, but
side.
it's good.
Yeah, because you can keep this up and then do the second one. I think the second one you'd be much more inclined to take.
Yes, 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 yes. Much,
This.
much more. Yeah. Because the high momentum's kind of just giving it away here.
High momentum plus, I mean, I mean, you're still completing order flow in a different way, but you still have this never
But you
broke.
have the range. Yeah, exactly. You have the
And I
range
have
to
a
pay
missed
off.
opportunity even. There's a missed opportunity right here. And this, when we're talking about that concept of an ad, this could have been the ad.
Well, actually, this is the best entry you could have taken because this could still technically be a sweep because this is bullish. You know what I mean? Because there's a bullish move here. So this could be a
Yep.
bullish range sweep, and then it could be like a move to the upside, which is it even gave a reaction. So this is probably this is the best entry you could have taken.
Hmm.
And yeah, this is a weak order flow.
Yeah, unsubstantial new highs and then
Mhm.
internal sweep here.
And yeah, this would have been a good ad. I would have not been opposed to that ad.
So I think you would be because if you go back to the last one, I took the 15-minute bearish engulfing. I actually didn't take this.
The
I took the ad
engulfing
very prematurely.
here.
I took the ad
Oh, this one here.
this bearish engulfing right here because it did break something internally here.
Mm-hmm.
And then you
That's
had a little
fine.
bit of a retrace there. And I took the retrace because this was actually after hours. This whole move is after hours. This is a post New York close.
Nice, nice, nice. But yeah, I'm always hesitant to trade this stuff, man. I don't know. It's also why I struggle with gold. Like I just don't want to keep buying, 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 buying. But it's just a belief. Like, boy, yeah, I purchased Jalen, I'm gonna add you because you're in the OG group. So I'll add you and then we can just talk after. Oh no, you already added me, so just message me. That's fine. But yeah, any more questions, concerns, or should we wrap it up here? Um, but yeah, I'm gonna make the fundamental book. I'm gonna make that real cheap, if I'll be honest.
I have one more quick one.
Uh-huh.
So I took a loss, and it's not marked up, but I think you're just gonna say it's just a CBOS and you need an internal transition.
Where?
Oh, I copied the picture, not the link. Hang on.
CBO, I mean on NQ. Oh,
Yeah, I just posted it.
yeah, it's still early. It's just early because of this hasn't broken. This is the low, the completion there. So if this breaks, then I now have a frame.
Oh, that one's not me.
Oh, shit. Oops.
It's just that white box.
Would that be, what's the question?
So I took this again because it's that
A
bias
buy?
of
Mm-hmm.
yeah, and then I found internally we failed to continue bearish. This was a little bit of a sweep here, and I didn't wait for like some kind of a transition there.
Yeah, the annoying thing here is like we have to acknowledge disruptions. So high, low, and see this would be a perfect sweep here. If you have the like some type of transition engulfing here, and then maybe internally there could be another potential move, but the the structure shifted after this disruption and this break, but this break here is just solidifying this range. But it doesn't seem like this gives a lot of entries when it goes bearish. I don't like that.
It does not. And I
I
think
don't
that's
like
why I
that,
forced
yeah.
it, and I avoid like
Yeah.
I kind of missed. I
Mhm.
just was forced.
Because something I don't get too is like, why does like futures traders, why does everybody only trade NQ? Like why don't people trade the euro or like S&P or US 30 or fuck
Because everybody's using
oil,
prop and it's
gold?
all of the leverage. Like it's like
Oh,
200
so
to 1
leverage
or
is
20
different.
to 1. Yeah,
It's
so every
different.
every 10 points of NQ is $200 versus every like I forget the exact leverage breakdowns, but when you're using these prop firms, the 4x, it's really bad.
But like why
And
not trade
everybody's
like the S&P and just do more contracts?
yeah, but you're limited, right? Like you have a contract
Oh,
limit on those prop firms. So no
that's
matter
tough. Yeah.
how it breaks down, they want you to trade NASDAQ because of all the volatility, and they know you're going to lose money.
Yeah. You see, that's why
It's pretty
I'm
bad.
never getting into that. I'm never getting into that stuff
It's
about.
bad. It's very bad. But I think even if you go,
Hmm?
Hey, Fredo, I wanted to ask you a question concerning order for completion. Do we like consider it as a conference whenever we want to take a trade? I'll really
I mean,
appreciate it
it's
for you.
just to help the timing because if you have the ABCD leg and then that last leg breaks, then that's the true shift. Because a lot of the time
Okay.
people want to just take it off the CBOS and that's like where it fails. It's like a lot of people want to do this and then see the move down to the downside, but that's not ideal because it's low, high, retracement, A, B, C, D. And then if that breaks, okay.
Okay, I get it. All right,
But yeah,
thank you.
this is why I've also it ties in with the sweep model. That's why I'm that concept's going to go on the sweep book. But I do have I hope I can finish that book by the end of the month because I think I kind of have everything down now.
between the sweeps and the little like breakdown you gave earlier, that changed it for me.
Yeah, because
Really changed
I've
them
seen a
because
lot of people trade sweeps, but it's always reversal based. I don't like that people like like people will do this as a range and try to look for a buy here because of this potential. But no, that just goes to show like that just shows me where you are as a trader, in my opinion. Like, no, you're not you're too hasty if you're looking for stuff like this. Because really you should just be looking for the continuation range, the sweep of the continuation range because the CBOS logic. Bang, bang.
Hi, Pharaoh.
Hmm.
Can you kind of explain a little bit of how you were mentioning something about correlation of time frame the other time when you're talking about aligning swing with
Look, bro,
intraday?
I think you're asking me the same stuff over the whole call. From here, just try M5, M15, M30, H1 and do the same thing that you're doing, but stay away from M1, M2 and you'll be fine. Because like, I don't have no secret sauce for you, bro. Like, I don't have no, like, this is going to solve it for you thing. Like, you have to see it because every single trade, um, every single trade that you've taken, like, if you just look at the structure on your picture from outside the M1, you will see where the continuation would have been and you would have been able to take that. So just do the
Yeah.
exact same thing you're doing, just away from M1, M2, and I think you'll be fine.
Okay.
Because I don't have no secret sauce for you, bro. I don't have no like I don't, you know what I mean? Like I don't know, like maybe because I don't pay attention to many other people that like trade and teach and all of that, but like I think my stuff is like pretty simple and straightforward. It's easy, no, but like nothing in trading is easy, right? Going there from ABC to ABCD, A, B, C, D. You can't buy here because the completion is this way. Like this is going to be in the sweet book for sure. Mm, AUDUSD doing? Because the ABCD concept, I kind of mainly use it for like smaller time frames. Let me see if I can see a false break here. That failed here. Perfect. So clearly we have a bearish break, whatever, and maybe there's a POI here or anything, but we have this move here, which is a bearish move. So many people will try to sell from here, but we have the internal opposing A, B, C, D leg, right? And then so once that order flow completion has been met, then I now have to look for the transition, but that's until this breaks or until there's another set of data, which is in here. So we have this that then breaks, and then this is your entire region to sell. The ABCD leg will probably oppose your external bias. It would probably contradict it. But obviously, like that's why there's multiple levels of structure. Like they don't all have to align, but the more that you can align, the better. And if you don't get it, then you just don't take the trade. It's fine. Even if you miss a move, that's fine. But yeah, it's gonna be in the sweep book for sure.
I also feel like it ties in a little bit to what you were talking about with well, actually not what you were talking about with inversion, but I think when I hear inversion in trading, because I've been seeing like videos on that, and just like the failure of the move.
Uh-huh.
Like for instance, that failed to be bullish. If you were like for the people who like, of course you shouldn't have looked for the first bearish move, but then we can see the failure of bullish momentum, and we still were bearish from hitting the POI. So once you look for the failure and then the continued reactions from there, your entry would have came. Like for
Mm-hmm.
instance, the best entry I saw from that one was the box that you
Mm-hmm.
drew the first box, because there was an engulfing it was really tight, but it
Mm-hmm.
still grew right there below the second box to
Mm-hmm.
the right.
This
Right
one.
there, right, engulfing. No, I'm actually on the transition down.
This one.
You had two engulfings actually. Damn, that's crazy.
Yeah. Mm-hmm. Like for example here, like this is like a clean transition here, but at the time I still have to assume this to complete order flow to the top. And then once it fails, right, then I start to look for a setup. But once it fails, like I have this, and then I go just trade this. Happens all the time. I think it happens a lot on GU too. You see here, like A, B, but people think that because you have LGC here, you're gonna buy here. No, but we were kind of buying at a premium. You have a C, and then there's a D, like up there. And so people think now here, nope, CBOS, transition, and then this is what you want to buy, TP1 there. Like the ABCD leg, it works a lot for the reversal side of stuff. Like if I was looking for a short, not there. Wait, hold on, guys. I'm waiting a phone call. Give me one sec. Hold on. All right, my bad, my bad. But yeah, it works more on like the reversal side of stuff. Like here, it's kind of like what happened with my USD cat. Happened with my USD cat stuff. here, right, where I was looking for the transition, but the ABCD leg is A, B, C, and still D. You know what I mean? So if I was to have waited for that completion and then the break, then I can wait. But like once the break happens here, it won't get the re-entry. So this is like the only cost. Like you will miss moves. Yeah, no worries, Jalen. Give me a message on Discord though, if since you're in the old group. Cool. But yeah, other than that, does anybody have any more questions, concerns, or can we finish it up here? Why is Zcash pumping so hard? Somebody told me that. I don't know, bro. I don't know. What do you want me to tell you? But it makes me want to get into crypto because I marked that up yesterday. This was a perfect like sweet bottle here. If you Yeah, I marked this up yesterday. It's still going. That's crazy. Like you can see the sweep here on the monthly. Bullish range, bearish sweep. I think on the 3 month there was a 3 pin. Oh, not a 3 pin. No, yeah, there was a 3 pin here, but this you see the engulfing here, and then that's like the whole range where to buy and stuff. And yeah, it's been going, still going. That's crazy. It's at $700. That's crazy, actually. After FTX scared of crypto, I mean, hey, sure. I don't know, but markets can never fear. I will never be fearful of markets. Like, there's always another scenario. Always going to be another scenario. But yeah, I guess we can wrap it up here. I guess if you guys want to see, ASEV is going really well. I'll probably post an update today. But yeah, ASEV is going pretty well. Everything's scaling up nicely. Well, actually, hold on. Let me show you guys something else. But yeah, just a quick plug too the for the private group. Yeah, for the people who are in the private group, I'm still making like just oops. I'm still making private. I'm still making these. So I still do these like every week or so ish. Details. But yeah, I still have all of these. So for people who are in the group, they get these for free. I do these like every week or so. Just free breakdowns, stuff like that. And then ASEV is still going pretty well, as you guys can see here. Still going pretty well. Wonder if it's updated. No, it's been like 2 days. But yeah, we've made, we're probably like at 13% now, if I'm being honest, ish. But
Hey,
mhm.
speaking of ourselves, like, are you guys like taking like a stock of I mean the performance of it on a monthly basis? Like on average, is it like above 10%
What?
or it can range around 5 to 10? Like the performance of ourselves, is it ranging around 5 to 10%?
What do you mean by 10%?
Like in terms of appreciations, like the growth,
I mean,
like the returns.
It's done 11% since September 15th.
Oh, okay. So average is around 10. Yeah. Around 10.
Well, it's a compound effect, bro.
I
So
guess.
it's so if 1 month it's 5%, maybe the next month it's more because it's a compound effect.
Are you looking? Are you guys looking forward to like selling it or
I would never sell this,
subscription type?
brother. I would never sell this. No, fuck no. I would never sell. Fuck no.
Oh,
Maybe as a subscription, I'll do one of the models, but like overall, I don't. I want to keep this like for me or like private investors, if anything. That's the whole point. Like it's really just private investors because this doesn't work with like $1,000 or like it barely works with like $5,000. Like I need margin. So I need like that's why this account has like $40,000, you know? Like it's a minimum like $10,000 for this thing to work right.
pretty good, man. Like
Yeah, it's pretty cool.
insurance. I think what
But
one month.
yeah, I don't know if I would accept I would like it would have to be like a private investor thing. I wouldn't even have this as a PAM. Like fuck that. Like I want this to be like 100% private, like outside the books, and then I have access to everything. Because right now these are all
Well,
just
that's
like my
good, man.
personal accounts.
Hmm, I see. So like I had a friend like we were trying to do like in Africa. Basically, there's a lot of people who we call them HNIs, high net worth individuals.
Uh-huh.
I had interacted with some like we have done like the management of 100K.
Uh-huh.
So that one wasn't really like there was no like a proper like the the system that worked really good like the asset. It was like it was like manual trading. Like I can trade on my own, or the guy trades, and then at the end of the month. But we were doing it on a quarterly basis. Like after every 3 months, this guy they're providing like 9%
Mm-hmm.
of the total investment amount to this HNIs. So I've been observing the performance wasn't really good. So like looking forward to it's more of a fund
Wait, what do
management
you mean? What do you mean? They did
like
9% in a month?
no, like every average, they do average of 3%. Like this guy, they have committed to this HNI that they'll be providing a minimum of actually it's 3% on a monthly basis, but they will be paying them like the interest, they will be receiving their interest after every 3 months. So they will be receiving 9%. So 3 months, first month, 3 months, second month, 3 months, third month, total of 9. So this guy
9%
they're
over
doing
three
it,
months?
yeah,
That's very good. What do you mean? That's very good.
yeah, that's nice. So, but the thing is, we are still in a process of coming up with a system that is assured, looking at
Nothing
acid
is a
now.
well, nothing is assured. Nothing is assured, brother, ever.
Yeah, I get it, but you know, with the system that you're running, the possibility or the probability of getting like above 10% over 3 months is like 50% or 70%, and that it worked pretty well with these guys. We are not yet; they're not yet there. We're still pushing on our own, but something
Mm-hmm.
that we can capitalize in the near future is like can build something out of that. Very possible.
I mean, yeah, but you also have to understand, bro, 9% in 3 months is really, really good. If you can beat if you can beat inflation, you're doing really well. Like most hedge funds are looking for like 15, 20% a month. I mean, a year, sorry. What do you mean it's not good?
Yeah.
It's very good, brother. Like this is exceptional. That's why I'm very hesitant to like want to sell or like want to move this. Like I would accept maybe a private investor, and then have like our own thing going on, like in the background, which like if somebody has like over $10,000 and they want to do that, like we can talk. But like I'm like, I don't know, bro. This like 3% per month, that's very good, bro. I don't know what you're saying with that. Like that's very, very, very good, bro. Because the reason why EA's bust, bro, is because everybody wants to get 10, 15, 20% a month and then it just collapses. No, you want something that's small and steady. This account makes like less than
Yeah.
1%. Like less than 1%, like less than 2% per week. Way less than 2%. Like maybe 1 point something percent a week or something like that. That's what it's doing right now. It just needs to update because right now it's at, let me see. It's already made $300 more than what it's already on here. And like that's,
Yeah.
you know what I mean? Like that's really good. Like
That's really good. It's really good.
So now it's just a matter of seeing just like I think the only thing I would do now is accept private investors. I wouldn't do no PAM. I wouldn't do no subscription. Maybe I'll do subscription later on. But I don't like the subscription thing either because like I said, you need a lot of money for this to work, for the strategy to work
Okay.
because it's gold based right now, and then I'm gonna have like currency ones as well. So it needs like more money, like it needs a lot of capital, a lot of equity to operate. Because if this is to bust, like I'll probably lose like 10% on the account. 10% of the
I
current
think
balance.
maybe so far. So far.
You know, and I can increase that to like 30% risk. Like I could lose 30% if it busts, and that means that I would be up like 30% right now. But I'd rather build something that's like proof, like foolproof, or at least as closest to foolproof as possible, because nothing is ever assured. Nothing will ever guarantee you a certain amount of money. And if people say that, it's a scam.
Yeah, yeah,
I'm sorry.
yeah.
I'm sorry. It's a scam. I don't give a fuck what anybody tells me. If you're saying that you can lock in X amount of profit per month, no matter what, you're a scam. No, thank you.
Yeah, but how can somebody how can these private investors, like, how do you guys like onboarding them?
Well, we would have to talk personally. I'm not gonna say that on here. I mean, we can talk privately.
Right, okay. I think we'll carry this Discord.
But if
See
you don't
how
even have $10,000-$15,000, like just don't even bother. Like,
it is above that. It is above that. It's above
uh-huh.
10. We were not talking about 5K. No, we are talking about 20, 30. Like recently, I have a friend who, like, she gave me like 20K. Then later on she wanted to add it up 20K again. So I was
Yeah.
just, because I was working with this broker, was by the name of Equity. So I
Which
was working
broker?
as a BD. Equity. Have you ever heard of Equity? Our HQ is in Dubai.
What's it
So
called?
Equity. Let me send you the link. This one.
Yeah, go ahead and end the recording here. We can still talk.